Alex, thank you so much for joining us all the way from Paris on this episode of Daily Block Party. We're excited to have you.
Thank you so much, Pamanisa. Super happy to be here.
So tell us a little bit about your background and how did you get into the crypto space?
Sure. So my background is I'm a French person, lived all my teenage years in Paris, then spent 4 years in the UK, always super involved in the startup world. My background is more like business management, kind of like now boring looking back at it, just normal classic university degree, and basically enter a technology industry that I could have the most impact, so low barriers of entry. And I feel like crypto was the best ones. And so this is one of my main reasons. And of course, like the potential for the space to about privacy and about equalizing opportunity of raising funds or managing finance for the whole world was a great idea that I really wanted to contribute executing on. And so mid 2017, before the big bull market, I started reading a lot about it, but I really got involved full time last summer. So it's still very recent as an active role. And so my focus was on Ethereum consumer applications. Consumer doesn't really mean real life. We're still experimenting with really crypto native things that probably people would not care about. And I spent the 12 last month doing this. And now I am more transitioning into a startup with an actual market. And so actual real life application that I'm super excited to do right now. So this is kind of like my rough background.
So I think it's so fascinating that you're trying to tokenize yourself. So there's 1 million Alex tokens, and it's based on your future earnings, which when you move to San Francisco from Paris. Tell me more about how you did that, how you decided to, how you marketed it.
Sure. So as I said, I spent the past 12 months exploring crypto primitives. So in short, things that you cannot do without crypto. So I've done many different things, and my latest one is about personal tokens, which is you create a simple token. So I created 10 million, but within those 10 millions, you can do pretty much anything without real permission. And I was just trying things out. And the reason why is, COVID-19 happened. I like some contracts of mine were down. I was kind of like, okay, I need a new revenue source. And I have this token that wasn't much used till now. So I created it like 6 months ago or something. And it was more like an hour of my time. And so there was some market, like a few $1,000s of liquidity on decentralized exchange on Ethereum, but it was mostly a low-key endeavor. And so, I just said, okay, let me do an income sharing agreement, which is something that's very hot in the startup world in San Francisco with Lambda School, where you pay your education afterwards. So it aligns incentives and people are incentivized to help you and succeed in your career. And so I had this Ethereum community around me because I'm quite open and transparent about all my learnings on Twitter. I've been to many conferences. And so I knew that perhaps I could have an opportunity at raising money transparently in front of my community. And people would not only be giving me money up front to ease my journey to San Francisco, but in the process, I would gain really awesome relationships and people will be willing to help me because now they kind of have some kind of some small equity in me. And so I found that was fascinating. And I'm super happy this actually resulted like in a success. Like I raised in 5 days. I thought it would take 2 weeks and I didn't really know what I was getting into, but it's been really great so far. So token of myself, tokenizing my future revenue in the next 3 years in exchange of money.
How much did you raise?
$20,000. So it's still a reasonable amount. I chose that $20,000 was the least amount that still could help me, but not too big, as in we're experimenting. I wasn't even sure I would be able to raise a loan, right? Like I have no company yet. I have no startup. I have no co-founders yet because my goal that I really display is like, I want to be a startup founder and you can be early in me and you can bet early. And that's kind of like the incentive, but I don't promise, venture capital returns because I capped it at 5x my ISA. So at most I will give out $100,000 in the next 3 years. So it's half philanthropy, half investing in someone for a profit motive.
Did you take inspiration from Spencer Dinwiddie or any other celebrity that tried to pioneer this?
So I did not know much about this athlete, Spencer Dinwiddie, who I think did this. I'm not even sure at this point because I think the NBA is canceled and he had some regulation problems because the amounts were so high. For me, my inspiration.
Well, the NBA initially did not allow it, but then they had a provision in their league that said that he couldn't do it. But once they amended the offering, the NBA did allow it.
Oh, okay. Awesome. Okay, cool. So, but my case is slightly different. Yeah, I think it is the same kind of profit motive of you're betting early on someone. So a young athlete in his case, and for me, it's like a young entrepreneur. But I was more inspired by James Gallagher, which is a very young person that is really exceptional. He won Pioneer, that app, which is like a tournament for young people trying to break into Silicon Valley. And he was always passionate about income sharing agreement. And I was passionate into Ethereum. And I knew that no one apart from me was really bridging those two worlds together. And so this is what inspired me because I had these Ethereum insights that James did not have. And at the same time, ISA is a really huge topic, but no one brought it on Ethereum. So this was my inspiration. But yeah, as you said, like there's so little inspirations. There's Spencer Dinwiddie, James Gallagher, and then Mike Merrill. But apart from me, like there was just 3 people before me. And so, yeah, the choices were kind of small. And yeah, Spencer is a great case as well.
So what information do the token holders need? Do they need your resume? Do they need to make a good investment decision to bet on you? What do they need to know about you?
So in my post, it's a Medium article where I display, it's I think a 10 minutes read on basically my kind of resume, my background, my intentions, and as much details as I can. And I think because it was kind of open, people didn't probably do a huge due diligence efforts on me. So I'm not saying this is bad or anything, but this is people just betting on me, and I'm quite unproven as of now, but I just displayed all my achievements in the past, my connections in Silicon Valley, because I spent like 6 months there. Also, yeah, my rise in the crypto ecosystem, Ethereum tiny environment. And I think this was enough to convince them. And the average amount is $700. So we're still talking about very reasonable sums. And there was 30 participants. Most of them I knew already. So there was already some trust. And so no, there was not transactional, resume or things like this or formal due diligence. Most of the people probably would have invested in me, and they just saw that new vehicle that made it super easy to do so.
And where would they trade the token if they wanted to trade?
So this sale is OTC, which means that I get the money directly to my wallet. It doesn't go through an exchange. There is actually an exchange, Uniswap, who has a liquidity pool where there's roughly $10,000 worth of Alex against ETH, and people can trade against it. But this is not this income sharing agreement. It's the same token, but the one I gave is kind of like a special one that I track the addresses who received those, and they will get my revenue. And the reason for it is I want to give 15% of my income as promised only to the people who sent me $20,000. If I did this to the entire supply, which is not 1 million, but 10 million, that would dilute my income sharing potential too much. And I think people are fine with this. So there's basically 2 Alex tokens in one. So in Uniswap, you can trade the utility. You can get a tweet from me out for basically marketing help, or I can basically do user testing, feedback, office hours on your decentralized application. That's the utility part that people can trade on Uniswap. And then the OTC sale of people who sent me money, and against it, I sent the same token for income sharing agreement. But yeah, they probably can sell it on Uniswap, but then it's basically a one-way bridge to the utility, and it won't be anymore the income sharing part. So yeah, basically, because you can do anything with a token on Ethereum, I decided to have one token have two users because I can keep track on both, and I have checks and stuff.
I know you said that there wasn't much of a formal due diligence process for people who decided to join. Did you do anything on your end? Did you decide, oh, this person wants to invest, but I'm not really sure that their backing is something that's a good fit for me?
So I did not, because I just went with first come, first served. And there was a few people at the end that I rejected because it was slightly oversubscribed. And thus I could have said, okay, let me prioritize my funders. But basically the way he turned out is, in my Medium article, I do a Google form where people send me the money. And so sure, yeah, I could have sent back the money if I didn't want it, but no, I didn't do that. And I would say roughly the demographics of the 30 participants of my sale is 15 people I know, which are respected people in the Ethereum ecosystem that I know will provide value. And the other 15 is people who just know me from Twitter and want to help me in a benevolent way. And so it feels okay. Sure, it's not a startup where the quality of the money of VCs is a huge signal. There's awesome people in my token cap table, and I'm really happy, but I was not selective, no.
So Twitter is the new crowdfunding platform.
It depends. I think it's everyone is its use case. For me, it was the ideal scenario because personal token is very new and it's very complex to do this procedure if you don't know about Ethereum and how a wallet works and how to send a wallet, pay gas, all of this. But because I am known in this tiny Ethereum ecosystem where everyone knows this, there was zero friction. Everyone is on Twitter. I posted it. Lots of people saw it and I fulfilled the sale. So I think the future would be about making it easier for artists, YouTubers, music artists, athletes, and all of them. But yeah, in my case, Twitter, Medium, and just a Google form was enough because my sale participants actually are pretty educated on crypto.
Switching over into some of the other work that you do, I understand that you've done some work marketing DAOs. Can you talk a little bit about that? Explain to anybody in our audience who might not know what that is and what your role is in marketing them.
Yeah, sure. So I co-founded a DAO that's called Marketing DAO. And so a DAO is a sort of organization that has no control or no CEO role where the whole community can embrace the role in a kind of meritocratic way. There is no central board of advisors or anything. And the reason I started Marketing DAO is because, blockchains, so there's Bitcoin, but after that, there's a lot of lots of blockchains trying to market themselves. And when you're backed by VCs and you have a team and basically your blockchain is centralized, which is the biggest insult in this space, it's easy to do marketing. But for Ethereum, there are so many different teams. The blockchain ethos is actually quite respected, but that comes at the expense that no one actually is marketing Ethereum to institutions, to developers, to consumers. And it's really hard to send a really unified signal about what are Ethereum core value propositions. And so it's 7 founding members, including Amanda Kotterman. She was ex-CMO at Consensus. Really awesome squad of top marketers, communicators in the Ethereum ecosystem who are trying to market Ethereum in different ways. So basically the way it works is we raise funding and then we give grants to marketing activities. And this is really awesome because we are marketing Ethereum the Ethereum way. It's really decentralized. Anyone can come in and if you have a great idea of marketing Ethereum, we can fund you. And if you think you know how to pick the great Ethereum marketing activities that will bring more people to Ethereum, you can come on board. And so it's really fascinating. And yeah, really great group. And yeah, I can talk more, but basically a grassroots movement, which you can start with crypto, which I think is very interesting.
So you have some involvement with non-fungible tokens?
Yes.
What is your involvement?
So I started a project called Rocket, which is basically uses NFT, which I call digital items. I feel like it's easier to understand that way. And my thought process was, okay, in crypto, you can do some complex trading position, like margin trading, and you can do some trades that are over collateralized, where you put more money in than out. But I felt like it did not fulfill the loan aspect. So long story short, you cannot do loan on Ethereum. It's really hard. And I was trying to see alternatives where you can have some sort of guarantee that was not putting more money in than out. And I thought that digital items were the great one. And so, yeah, Rocket is giving loans against collectibles. And if you don't repay, we liquidate your collateral on OpenSea, which is like the main digital items platform. And so the range of loans went from virtual land, like Decentraland, which is like this new virtual world that's a mix of gaming and social media and virtual reality even. So we gave loans against this. So virtual real estate, then domain names. So someone gave us a domain name that's his own name. And so we decided to give him a loan, and if that person will not repay, we will sell the ENS name. And so it's a great new way to find new liquidity path in DeFi, not just putting ETH down or putting cryptocurrencies down.
So if I want to buy a piece of land in Decentraland and I don't have enough capital to do it, I basically borrow from you and you take my collectibles as collateral, right?
Yes, exactly. So that's also a feature that we provide, which is virtual mortgage, which is kind of weird when you think about it. But yeah, if you want to acquire some virtual real estate land, we would basically buy it on your behalf. And then as long as you don't repay, we would hold the collateral, and then we can sell on auction on OpenSea if you default. And so, yeah, I think it's definitely the future. It's more like a crazy experiment for now because the volume is very low. But yeah, this is basically what you can do with it.
Very interesting. And when you say there's no lending on Ethereum, you're not including DeFi lending.
No, yeah, like, I mean, Compound, Aave, all these DeFi lending platforms, you have to put collateral down. You have to put money down. And so there is no DeFi. There is DeFi lending that's over collateralized, but there is no DeFi loans, which is we give you money without you giving money. And so putting a collateral like a house in real life is intuitive, but there was no way of doing this on Ethereum. And so this is why I thought that digital items was the best alternative to the house as collateral in our real lives.
So which collectible would have the most value to allow me to buy a piece of land, for instance?
Well, we think that the best collectible is actually the piece of land. So digital real estate, so Decentraland, crypto voxels, these are the best ones because real estate on these new virtual lands are scarce. And Decentraland is a really well-funded team, an amazing team, and we think they can execute. And so based on this, we think that the real long-term value of these collectibles is great. And thus we are willing to lend against them because we are confident in their long-term value. So yeah, so it's also why we do virtual mortgages, like you just said, because we are confident that even if that person doesn't repay, we would do great business reselling it.
What if I acquired like a sword and armor in a game, and it's very rare, and that platform goes out of business, but I still own my collectible? Would I be able to use that as collateral for my piece of real estate?
So the answer is no. And this is also because I'm perhaps not a gamer. And so that's a bias against it. But I feel like gaming platforms have a too fast hype cycle. And so as you said, if that game goes unpopular, like CryptoKitties, which was like a game, NFT game, digital item, so technically could be eligible for a Rocket loan. They had like a really huge drop off after the quick hype in 2017. And so this is why we do not take gaming items. Decentraland and virtual land do not actually count as game too much, in my opinion. And yeah, game items, really hard. They're really short term as well. Like, you just use them for a tournament and then the value decreases. And this is why I don't think it's a great collectible to loan against. So you're right.
Very interesting.
So you're saying the land is much more valuable than these other collectibles.
Yes, land is more valuable. There is also art, crypto art. So there is Josie Bellini. She's a very famous artist in Ethereum. And someone came to us with 2 Josie Bellini rare arts worth, I think, $2,000, $2,500. And so we gave a loan of $1,000. So we are kind of still safe on the loan to value ratio. And that's also a thing that we think has long-term value. Art in crypto, especially the early artists that are famous and proven, we are quite bullish on, and it's more long-lasting than games for sure. So yeah, I've done digital items, personal tokens with Alex, DAO with Marketing DAO, and yeah, and also I guess DeFi. So before Rocket, I was also doing I was actually searching about insecure lending and DeFi loans, and this is how I came up with Rocket. And so Rocket is one answer to DeFi loans, and so loans on Ethereum. But now there's a wave of other startups, Union Finance, Maple Loans, Zero Collateral, that are new startups in the Bay Area and the US who actually will provide DeFi loans without collateral upfront. And it's really interesting because they use normal companies like Credit Karma to build up your credit score, or they gradually decrease the amount of collateral needed. So anyway, my point is, apart from Rocket, there are new ways actually where you could actually get loans in crypto, and that's really fascinating, beyond just putting collateral first, like DeFi lending today.
Well, great. Thanks so much, Alex, for educating us. Very exciting stuff.
Thank you so much.
Yeah, really exciting to talk to you, Alex. It sounds like Twitter is the place for people to find you if they want to connect with you or find out about all the different projects you're working on.
Yeah, exactly. My Twitter DM open, I guess. And yeah, feel free to message me on Twitter or Telegram. My username is the same. There's the main path.
Okay, great. We'll put a link to that in our notes. Thank you so much.
So thank you.
Bye. Thank you.
Bye.